All right, ready to unlock some secrets. Today, we're taking a deep dive into fundamental analysis.
Yeah. It's all about figuring out what a company is really worth.
Like, more than just the hype, right?
Yeah. Think about it like, are you just looking at the menu prices at a restaurant to know if it's a good investment?
Ha! No way. You want to know about the food, right? Who's eating there? The competition.
Exactly. And most importantly, who's in charge?
Okay, makes sense. So, where do we start with, like, this financial investigation?
The annual report. Think of it like the company's own story.
Oh, juicy. Like their autobiography.
Kind of. You can track their journey, the ups and downs, see what they're planning to.
So, you compare, like, this year's report to the last one.
Exactly. See
Yeah.
how they've changed. New markets, cost cutting, all those details.
Gotcha. But annual reports, they can be like really long and complex. Any particular section we should focus on?
Absolutely. Management discussion and analysis. We call it the MD&A.
MD&A. That sounds pretty official. What's the big deal with it?
Well, imagine you're listening in on the company leaders.
Mm-hmm. Like
Yeah.
eavesdropping on their strategy meetings.
Basically, they lay out their plans there, their concerns, even their challenges.
Ah, so you can see if their actions match their words.
Exactly. And pay close attention to how they say things. Are they overly optimistic, downplaying risks?
Like reading between the lines. Cool. So we've got the annual report, the MD&A. What's the next clue in our detective work?
Well, after reading what the company says, we listen to them. Investor calls.
Investor calls. Those sound kind of intimidating.
Not really. Think of it like a live Q&A.
Oh, so you get to hear them explain their strategies, answer questions?
Yeah, and you can compare like this call to the one last quarter or even last year.
See if they keep their promises.
Exactly. Are they adapting to what's happening in the market?
You know, this is making those financial news segments way more interesting.
See, that's fundamental analysis. It's the story behind the numbers.
I'm hooked. Okay, so we've got the annual report, the calls. What's next?
We zoom out. Look at the company as a whole. It's not just the numbers, right?
Right, back to that restaurant analogy. You need to understand the whole business.
Yeah. What do they actually do? Who are their customers? What are their challenges?
Like their recipe for success.
Exactly. And then who's running the show? Research that management team,
Because a great leader makes all the difference. Like in sports. Right.
for sure. Then look for growth triggers, new products, expanding markets. What could make this company take off?
Exciting stuff. And of course, we can't forget the competition, right?
Definitely not. Who are they up against? What makes this company stand out?
Time to put on our detective hats. So where do we find all this info?
The company website is a good place to start. Their online storefront, their mission, their news.
So we're going digital, huh?
And don't forget investor forums.
Wait, those are like just random opinions, right?
Sometimes. But you can find people who've been following the company for years.
So they've got insights we might miss.
But always double check anything you read. Use your judgment.
Gotcha. So we've gathered info about the company, the industry, the team. Now it's time to face the dreaded numbers, huh?
You got it. But don't worry, we won't drown you in spreadsheets.
Okay, good. So lead the way. I'm ready to crack the code of these financial statements.
All right, so we're ready to dive into those numbers. But remember, we're not just looking at random figures. We're trying to answer some key questions.
Okay, hit me with those questions. What are we trying to figure out?
Basically, is this company actually making money? Are they managing their debts well? And are they bringing in enough cash to grow, for the future?
Those are definitely the questions on every investor's mind. Where do we find those answers, though?
That's where the three main financial statements come in. The income statement, the balance sheet, and the cash flow statement.
Like the company's vital signs.
Exactly. So let's start with the income statement. It's like a report card.
A report card? How so?
Well, it shows how much money they made. That's the revenue. How much they spent expenses. And what's leftover profit all over a period of time.
So you can see if they're making more than they're spending.
Yeah. But we also look at their profit margins. Are they making a decent profit on each sale? And how are they handling those expenses? Are they keeping them under control?
Right, because you don't want costs spiraling out of control.
You got it. Now, while the income statement shows us their performance over time, the balance sheet gives us a snapshot.
A snapshot of what exactly?
Their financial health at a specific moment, like a financial selfie.
Okay, a selfie. So what are we looking for in this selfie?
It shows what the company owns assets, what they owe liabilities, and what's left for the owner's equity.
It's like a financial inventory. What do they have? What bills are due? What's their net worth?
Exactly. We want to see a good balance between those assets and liabilities. You wouldn't buy a house with a huge mortgage and no equity, right?
Definitely not. Got to build that equity.
Exactly. And speaking of cash, that brings us to our third financial statement, the cash flow statement.
All right, let's see that cash flow. What does this one tell us?
Think of it as tracking the money coming in and going out of the business. Where is it coming from? Where is it going? How much is left over?
Like following the money trail.
Precisely. We can see if they're generating enough cash from operations to cover their expenses, invest in growth, maybe even pay dividends to shareholders.
Ooh, dividends. Now you're talking.
But here's the catch. A company can be profitable on paper, but still not have enough cash if they're not managing their cash flow well.
Like having a fancy car, but no gas to drive it.
Exactly. That's why this statement is so important. It shows their financial sustainability.
Okay, I'm seeing how these three statements work together to give us a whole picture of the company's finances.
Yeah. But there's one more piece to consider. We need to zoom out even further and look at their industry and the overall economy.
So it's not just about the company itself. It's about the environment they're in, too.
Right. Think of it like even the best swimmer might struggle in rough waters.
Makes sense. So what do we need to know about their industry?
Is it a growing market?
Yeah.
Are there new technologies that could disrupt things?
Is it a rising tide or a sinking ship?
Exactly. And who are the big players in that industry? What are their strengths and weaknesses? How does this company stand out?
So we're analyzing the competition, seeing if they can actually win in this market.
And don't forget those big picture economic factors, interest rates, inflation, economic growth. All of those can impact any business.
Like checking the weather forecast before a hike.
Precisely. By understanding those trends, we can see how resilient this company is. Can they handle the challenges?
Okay, I'm getting a much clearer picture now.
Okay.
But you mentioned the management team earlier. Where does that fit into all of this?
Ah, yes. Evaluating the management team is so crucial. They're the ones steering the ship right. We want to make sure they have the skills to navigate.
I like that analogy. So what makes a good captain in the business world?
Well, experience and a proven track record are important, but also their decision-making skills. How well do they execute their strategies? Their communication style, too. Are they transparent? Do they take responsibility? Can they articulate a vision for the future?
Those are the qualities that are hard to measure, but can really make or break a company in the long run.
Exactly. A great management team can be a huge asset, guiding the company through challenges and making the most of opportunities.
Okay, I'm feeling like a real financial detective now.
Yeah.
We've got the financials, the industry, the economic outlook, and the management team. What's next on our list?
Okay, so we've analyzed those financial statements, we've checked out the competition, we've even sized up the management team. Pew.
Right, it's been quite the deep dive.
I feel like we've earned our detective badges. But I'm guessing there's always more to learn.
Absolutely. There's always another layer to peel back, another clue to uncover. That's what makes this so interesting.
Okay, I'm ready for more. What other mysteries are we going to solve today? Well, we've covered a lot of the quantifiable stuff, right? The numbers. But those qualitative factors matter too.
Ah, you mean things like brand reputation, customer relationships, company culture, the stuff you can't really measure.
Exactly. Think about it. Two companies could have similar financials, but one is known for innovation, great customer service ethical practices. The other has lawsuits, bad reviews, questionable leadership.
Yeah, I definitely feel better investing in the one with the good reputation.
See, those qualitative factors can be huge indicators of long-term success. They attract customers, good employees, loyal investors.
Okay, I see how those intangibles add value, but how do you actually assess them? It's not like they're on a spreadsheet.
It takes a bit more digging. You have to read those industry reports, look at customer reviews, news articles, even social media.
So it's like doing a background check, but for the company's personality.
Yeah. You want to know how they're perceived by customers, employees, the public.
Where?
What's their story? What are they about? Are they walking the talk?
It's like putting together a puzzle, using all these different pieces of information.
Now, while those qualitative factors can be subjective, we also need some objective measures of valuation. And that's where valuation multiples come in.
Valuation multiples. Are those like the price to earnings ratio? We talked about that before.
Yeah, PE is one example.
Yeah.
It compares the stock price to earnings. But there are many other multiples we can use, depending on the industry, company itself.
So it's like having different tools for different jobs.
Exactly. And it's important to remember, no single multiple is perfect. We use a combination to get a better overall view.
Like using multiple lenses to get a clearer picture.
And once we've calculated those multiples, we compare them. That's called benchmarking. We can compare them to industry averages or to the company's own history.
So we see how they stack up against the competition
Hmm.
and how their valuation has changed over time.
Right. And by doing that, we can spot potential undervaluation or overvaluation.
So if a company is trading at a lower multiple than its peers, it could be a good deal.
Potentially. But remember, valuation multiples are just one piece of the puzzle. We need to consider all those other factors too.
Yeah.
The financials, the management, the industry, the competition, and those qualitative aspects.
Right. It's all connected. Okay, so we've learned how to analyze the numbers, assess the industry, size up the management team, even consider those intangible qualities. What else do we need to know before we start picking stocks?
One of the most important things to remember is risk. Every investment comes with some level of risk, and it's important to understand that before you make any decisions.
Okay, so what kind of risks are we talking about here?
Well, there's business risk. The company might not perform as well as expected. Then there's financial risk, which is about their debt and whether they can meet their obligations. And then there's market risk. The whole stock market could decline.
So there are definitely bumps in the road.
Right. And there are ways to manage those risks. One is diversification. Don't put all your eggs in one basket. Spread your investments around.
Diversify. Got it.
Another important thing is to have a long-term perspective. Don't panic and sell at the first sign of trouble. Remember, the market goes up and down. But over time, those good companies tend to do well.
So we ride out the storm and stay focused on the long game.
Exactly. And remember, fundamental analysis is a journey. It's a process of learning and adapting and refining your skills.
Wow, I've learned so much in this deep dive. I feel like I've taken a crash course in financial detective work. But I also know this is just the beginning.
That's the right mindset. The market is always changing. So your approach should too. Keep learning, keep asking questions, keep challenging yourself.
Well, I definitely feel more confident about making investment decisions now. Thanks to your expert guidance, I have the tools to really analyze the market.
It's been my pleasure.
Yeah.
Remember, knowledge is power, especially when it comes to investing.
Well said. I think we're ready to go out there and put these new skills to use.
That's what I like to hear. Happy investing.